afternoon, everybody. This is Trey getting back in touch with you from Japan. Today's good news is that it's my buddy's birthday party. We're gonna have a party tonight. I'm gonna make some pizzas. We're gonna get some roll cake. If you've never had Japanese roll cake, you must try it. It's fantastic. Anyways, going on to today's video. This week we've been looking at Walmart, Target, and Costco, three similar yet quite different companies. And we've also been comparing them and contrasting them, but we're also kind of thinking about how will retail be changing due to the pandemic, and also how will traditional brick and mortar retail be changing with Amazon's growth. Each of these three companies has its own kind of position in the market. They're all great companies, they're all great investments. So I wanted to compare them all as stocks, not just as companies that are cool stores to go and buy stuff at. But as stocks, and I wanted to make some recommendations based on those for you based on your investing style. Let's dive right in. First of all, let's take a quick look at the market caps, just so you can kind of get a good idea of how actually different these companies are. Smallest one, little baby Target, 59 billion. Second one, which is almost 3 times bigger, is Costco, 143 billion. And then Walmart is 361 billion. More than double the size of Costco in terms of market cap. Revenue, again, that similar story, 78 billion to 152 billion to 523 billion. These are annual revenues based on the last completed fiscal years for each of these numbers. I thought this was interesting. Take a look at the number of items in store that they have. Obviously, everybody knows Costco isn't the place you go to complete all of your shopping. They have quite a limited number of SKUs, 3,700 items versus Target's 75,000 items versus Walmart's 140,000 items. Walmart is kind of the only one that offers a wide enough selection to even compete parallel to Amazon in terms of, like, if you had to only go one place, basically your only choices are Walmart and Amazon. This doesn't have anything to do with what we just looked at. I just thought it was really interesting. The sales per SKU, per item number, Costco obliterating everybody with 30 million per SKU. So that means every single item that they offer, they're making $30 million in sales on that one item around the world. Target's at 1 million, Walmart's at 2.5 million. Moving on to a little bit more stock analysis stuff, PE ratios. I mentioned in the Costco video that the PE ratio is very high, and it's very high for a reason, and it's because Costco is a very beloved stock by many people. Check out these PE ratios. Walmart, a little over 24. Target, almost 22. Costco, almost 40. So it's like almost double Costco's PE ratio. If you're not sure what a PE ratio is, click on the top right up there. I break down PE ratios and how they can be helpful and how they can be a little bit deceptive. But generally speaking, my opinion is that the stock market as a whole is quite high right now. Costco is very expensive, but looking at a lot of analyst estimations and things like that, kind of all three of these stocks are set to be doing pretty good in the coming years. As mentioned in the respective videos, all three of them are making really good transitions to internet, to e-commerce. Particularly Walmart and Target are also doing a lot of order online, pick up in the store type things. Perfect timing considering the sickness going on around the world right now. If you're enjoying the video so far, please take a moment to leave a like, and it would be super dope if you also left a subscribe. That would help us out very much, and it would also make my weekend. Let's look at the earnings per share. Walmart $5.19, Target $6.39, Costco $7.89. We don't learn a whole lot just from these numbers, and it's not really helpful for us to make an investing decision just looking at those. I did want to take a look at a couple of ratios that would give us a better feel for why Costco is so appealing to so many people right now. Take a look at the quick ratios. Walmart's 0.2, Target's 0.18, and Costco is 0.47. This basically means the amount of cash and cash-like assets on hand versus the amount of liabilities they have. Costco is just holding so much more cash as a ratio compared to the other companies. Similarly, let's look at the total debt to equity ratios. Walmart 0.73, Target 0.97, and Costco 0.58. Costco is so much lower. They have much less debt, and they also have much more cash on hand. In a similar vein, check out the cash per share ratios. Walmart, $3.34 of cash they have on hand per existing share in the world. Target, $5.11. Costco, $21.48. Costco has like 4 times more cash on hand per share than Target, and much more than Walmart. As an investor in times like this, where it's kind of like uncertain, we don't know how companies are going to be making these transitions, or as, retailers where humans go and cough on each other all the time. It's iffy and uncertain, but knowing that the company you're investing in has piles and piles of cash can be reassuring. On the other hand, I wanted to take a look at the gross margin percentages. Check this out. Target actually has the highest gross margin at almost 30%. And that's almost 3 times Costco's, which is about 13%. Walmart's sitting at just under 25%. So in terms of profitability, Target is doing a really good job. And let's take a look at the net profit margin percent, which tells a similar story. Walmart 2.9%, Costco 2.3%, with Target sitting pretty at almost 4.2%. So that shows us that Target, though they've appeared to be sort of middling in these figures we've looked at so far, they're actually doing a really good job in terms of pulling in a good net profit margin. Next, for you dividend lovers, I wanted to take a look at the dividend figures. First, let's look at the dividends per share. Walmart, $2.12, Target, $2.60, Costco, $2.36. These dividends aren't wildly different, but we know that to buy a share of Costco costs way more than the other ones. I also wanted to touch on the dividend payout ratios. A dividend payout ratio is basically looking at how much of the money that a company holds at the end of a quarter after paying for everything is being paid out in the form of dividends. We look at Walmart and Target, they're both about 40%. Costco is much lower at just under 30%. That gives us a sense of comfort as far as Costco goes. Although none of these numbers are terrifying or uncomfortable or anything like that. Dividend ratios can be really interesting to look at because some companies will have like 80% or 100% or even more than 100%. And what that means is they're basically going to the bank and saying, hey, lend us money because we need to pay dividends to people. And that's terrible because the companies actually aren't using their income. They're not using their money to invest in new technologies or to start up new kind of business arenas or things like that. For new dividend investors, a lot of people just look at the payout ratio and be like, dude, this is going to be so great because it's so high, but it's not going to be sustainable and it's actually quite risky. If you are the type of dividend investor that just wants to buy a stock, leave it there and reinvest over the years, you need to pay attention to this because companies aren't going to be able to last if their payout ratio is too high. As far as these 3 companies go, they're looking pretty fine. I wouldn't worry about them too much, but again, Costco comes off a little bit safer in this. If you don't know your investing style, please take a second to watch the video that I made on that up here. My personal investing style is mostly capital appreciation with a little bit of dividend growthiness stuff going on inside of it. In regards to these 3 companies, I would kind of go out on a limb and say if you're thinking about capital appreciation, Target might be the one to go with. We saw their higher profitability and also lower PE ratios. Again, the market is quite overbought right now, so their PE ratio isn't like super hyper appealing at the moment. But I feel like it's most likely to be the one that goes up by leaps and bounds in the coming years in terms of like a percentage of its current stock price. Thinking about dividends straight up, bang for buck, Walmart and Target are pretty similar. I feel like both of them are on the right path for the next generation as far as transitioning to e-commerce. We know that Target is like slightly more profitable, but that's not really going to play in when you're looking at the whole international big picture. We know that Walmart is in many more countries. They didn't fail in Canada like Target did. And generally speaking, Walmart's just going to keep marching forward and it's just going to keep taking over. And its wide moat is probably just going to keep getting wider. When comparing Walmart straight up against Amazon, we know that compared to the other guys, Walmart's kind of the only one that has the really, really broad selection if you could only go to one store, one brick and mortar store ever for the rest of your life, you probably would have a really hard time if you couldn't ever go to Walmart. You know what I'm saying? So Amazon aims to be that. It aims to be the one-stop shop where you can get absolutely everything. Walmart is the closest brick and mortar thing that there is to that. And so when thinking about stability in the super long term, I feel like Walmart is a really good choice. Costco is also really stable. It's also really good. I love Costco. When thinking about a dividend, Costco is like not appealing at all. But when thinking about the stability, click up here for that video. When thinking about the stability, especially when looking at the 90% membership renewal rate, every year 90% plus of their members just resubscribe, even when the prices go up, even when the membership prices go up, even when they change their partner credit cards, things like that. Like, the brand loyalty to Costco is just so beast, and that's really appealing to me, as far as being something that I'm just kind of dollar cost averaging into over the months and years and thinking about the long term. So broadly speaking, I don't think you can really go wrong with any of these stocks, but I would give a slight edge to Walmart and Costco, particularly right now because Costco is just so expensive for the stock. I don't really think you should be running in and putting huge amounts of money into Costco. If I just had to choose one out of these three right now, it would be Walmart. But if we see share prices dropping significantly over the coming weeks and months, as well as seeing how the e-commerce growth kind of goes in the coming months and years, especially with Walmart Plus just getting started, I think kind of in a half year or a year, things might be a little bit different. And it'd be fun to kind of revisit and redo this whole analysis. So I hope that was helpful for you. Hope that was some good food for thought. Let me know which one you're going to go with, or which ones, and why. I would be interested to learn a little bit more about your investing style as well. Thank you guys for your time. Thanks for watching. See you soon.